Hi, this is Peter from Game of Trades. This market is absolutely crazy, and I'm here to help you navigate through it every step of the way. Now, we all know investor complacency and greed is at extremes. The fear and greed index on CNN is at extreme greed. We've had the put call ratio at extremely low levels, historically low levels, for days now. The last time we had these combined conditions, we had a big drop on the stock market. So that's exactly what we're going to talk about today. What are the chances of seeing a significant drop in the markets right now? And I'm not talking about a 3-4% drop. This is not going to be a short-term technical analysis video. What are the chances of a large double-digit drop in the market? Is that something we should be worried about right now? Now, as many of you know, we think this is one of the last moves up we're going to see in this bull market that started in 2009. And we've said this is going to be a historical move up in price, leading to hyper valuations in the stock market. And that's something we've already started seeing on the Russell 2000, which is the small cap index. Look at this price action. If this is not a melt up, that I don't know what is. This is something we've been talking about for a long time. So now is the time where we start looking for a long-term top in the market so that we can exit our long position that we have on the S&P 500 and even start looking for shorting opportunities like we did throughout the March crash. So have we seen the top of the bull market? By the way, make sure to like this video. It really helps our channel out massively and makes our research and the time spent on these videos worthwhile. So thank you very much for doing that, and don't hesitate to drop a comment down below to let us know what you think. So we're going to start off with this weekly chart of the S&P 500, and we've got this trend line drawn here. This is the trend line that we've been looking at for weeks, and this remains the most important trend line on any chart right now. This is what every trader, every investor should be focused on and should realize the significance of what's happening right now. If we zoom out, we had rejections at every significant top in the market throughout this bull market. 2014, 2018, 2020, we had a rejection here, and now we're breaking out and we're significantly above it. We've closed above it on a weekly basis for the first time. So why is that so significant? Why are we so excited about this? Because this happens at the end of every bull market. Let's zoom out and see if that's true. In 2008, right here on the S&P 500, you had this trend line right there, marking that resistance throughout the entire bull market. And just a few months before the major top in 2008, you had a break above the resistance level, backtest, and resumption. Let's zoom in. You can see that slow grind, breakout, backtest, significant top. And you can see it's happening on the NASDAQ right now as well. The tech sector ETF, perfect price channel, breakout, backtest, and now we're starting this blow off top move. And you'll see how similar that is to 2000, to the dot-com bubble right here. Same thing, perfect price channel, breakout, backtest, blow off top. Rinse, wash, repeat. Just look at how beautiful that is. And we're not going to focus too much on that. We've covered this before on this channel, but this is just to show you how market sentiment works and how powerful it is. This is why you get moves in the market that nobody understands, these irrational moves that are fueled by greed and that don't fit with the fundamental picture. And that's what leads to ultimate tops and eventually gets a lot of people hurt, especially the ones who don't care about valuations. So we're going to look at some of the data behind this today, which is not something we've done before. We've looked at the price action and the technical picture, how similar it is, but we haven't actually looked at the data highlighting the complacency in the market in the dot-com bubble and how similar or not it is to right now. And to look at that, we're going to take a look at the put call ratio, but we're going to look at it from a very different angle. Now, obviously we've had a recent spike in the put call ratio. That's short-term stuff. It does suggest that the markets could start to move higher and that we're no longer in that risky position that we had just a couple days ago. But we're going to cover that in the next video. So make sure to subscribe and turn on the notifications to tune in for the shorter term picture. What we want to look at today is the fact that the put call ratio is making extended moves lower. So we all know that the put call ratio is an indicator of the complacency in the market. If everyone is buying calls, the put call ratio is extremely low. That means the market is complacent, and it's often something you go against. But what we're looking at today is the fact that we're getting these readings very, very often and for extended periods of time in this recent rally. Is that something that should worry us? It means the market is getting complacent for longer periods of time. What does that mean? And so to have full access to the data going back to 2000 on the put call ratio, we're going to take a look at this chart right here. So we have the put call ratio right there in blue, and we have the stock market in black right there. And so you can see right here in 2020 on this recent rally, we've had the put call ratio overextended for a long period of time. This is a sign of complacency in the market. We have multiple hits of this red line very, very close to each other. So let's see when that happened in history. Now, we had a brief tag in 2015, but that wasn't an extended period of time under the red line like it is now. Where we did see that was in 2009, 2010, right here. This zone was a multi-month period where you had a lot of complacency in the market. You had the same thing here in 2003, 2004. A lot of complacency in the market. And you had the same thing here in 1999 and 2000. So what does that tell us about the stock market? It tells us that we get these complacency readings near the bottom of bear markets right after 2008, right here, the 2008 stock market crash. Same thing in 2003 right here, bottom of the bear market. But you also get these readings at the top of bubbles. This was the .com bubble. You can't see this on this chart how powerful it was, but if we take a look at the NASDAQ during 1999 and 2000, it looks something like this, right? That's what the market is telling us. Either we're at the bottom of a bear market or we're at the top of a bubble. So drop a comment down below telling us where you think we are in this stock market cycle. Are we at the top of a bubble or at the bottom of a bear market? Now, our personal opinion is that we are in fact in a bubble and that we're heading towards the top of the bubble, similar to what we had during the .com bubble, but actually worse. Look at where valuations are compared to the GDP. Why is the price going up, but the GDP is going down? And the answer is there's a tremendous amount of leverage in the market right now. It's a lot of debt, but with no growth. We've had an enormous health crisis that's impacted our growth, and yet we've had the debt load increase massively and prop up the stock market to significantly higher valuations. Now, does it mean it's going to pop tomorrow or the day after? Does it even mean it has to burst in the next months? No. Nobody really knows when it's going to pop. But that does not change the fact that this is not an environment in which we want to place our capital. This is over-leveraged and overvalued, and those are two major things that we don't like about investing in the stock market. And if we look at the year-to-date performance, we think there are much better opportunities out there than stocks. We've been positioned in cryptocurrencies since October on gameoftrades.net. We've been positioned in gold. We've been positioned in precious metals. And if we look at the price action year to date, so from December 2019 to December 2020, we have gold outperforming stocks and we have Bitcoin vastly outperforming stocks. So there are better opportunities out there than the stock market. And we're going to continue looking for these investments that are likely to outperform the stock market over the next decade. If you're interested in those kind of opportunities, make sure to check out our website at gameoftrades.net.